What's up, guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So what we're going to do today, FHA, we're going to do live pricing, okay? We're going to go through the whole entire, it's not really like an application per se, like I'm not going to show you anybody's personal application, but what we're going to do is we're going to go through different credit scores to see exactly how much it would cost, what the difference in interest rate is, and an actual, instead of me telling you, hey, the interest rate today is at 4.64% on an FHA, and this is how it is, it's better to show you exactly how it is as far as what the pricing, the upfront mortgage insurance, to kind of go into a little bit of a detail, because I don't think anybody really goes into the detail per se as far as doing the whole entire loan, rather than just showing you, okay, these are the guidelines, because guidelines, they don't really mean shit to anybody. It really doesn't mean much to anybody unless you actually physically see exactly how much an FHA loan costs, how much it would be for you to go ahead and obtain it at 3.5%, 10%, 20%, whatever it is. Majority of people will go to the 3.5%. Now, there's a few things with FHA loans that you do have to go that people don't like about them. Number one is an amendatory clause. That is one of the biggest down draws as far as an FHA an FHA loan. An FHA loan goes. But as far as an FHA, a mandatory clause is something. So what is an amendatory clause? A mandatory clause is like in a seller's market is what we currently are. We're in May 2022. And a mandatory clause is not something that's really good in a seller's market. It's great in a buyer's market, but it sucks in a seller's market. So since we are in kind of like a seller's market, but we're kind of like teetering off of the seller's market a little bit, it's kind of like shifting. As everybody will notice now, inventory has increased. Everything is getting a little bit interesting right now, to say the least, because interest rates have increased so much. But a mandatory clause is, let's say you go into contract for $400,000 on a house, right? You're at 3.5% down. Now you get into contract, and then you have two things that everybody is always biting their fingers and they're just like so worried about it, is going to be number one, an appraisal, and number two is going to be an inspection. Now these two things as a buyer are amazing. They're the best thing in the world for you because they cover your ass. It's a CYA type of thing, right? Because you don't want to go buy a house that can't pass a stringent inspection. That's just stupid, right? You don't want to do that. Now FHA has the I would say, in my opinion, that it has the highest level of inspection criteria out of every single loan. I don't know any other loan that has a higher like inspection fail rate than like conventional definitely doesn't, VA doesn't. There are certain things with the VA that are just as high as FHA, but the FHA is probably the highest one that you could do. So if you went into purchase contract for $400,000 and the appraisal came back at $415,000, that is what we call an appraisal gap. That means that somehow you guys, between the buyer and the seller, you guys either A, need to go ahead and come to an agreement where you could go ahead and get back to the $400,000 or get to a $415,000. You could actually just increase the home price of $415,000, and then you don't have an appraisal gap, and then the appraisal gap, and then you could just keep in contract if your debt to income still allows it to happen, and then you guys could work out other credits or whatever it is. That's something very common that people have been doing, where we adjust the purchase contract and put it to $415,000 if there is an appraisal gap, or B, the seller goes ahead and gives you a credit of $15,000 so you don't have to go ahead and cover that, or you could go ahead and cover the appraisal gap as far as the buyer side goes, and that means that you just have to come up with the $15,000 out of pocket to go ahead and put into the property. Number two is going to be the inspection. The inspection is one of those things that everybody is like, just biting their fingers. Now, FHA, if you're going through that property and you're seeing anything like something's wrong with the window, the paint is chipping, there's a broken window or anything, you got to fix all of that, because that will fail your inspection and will give you a lower it'll just fail the inspection. That's all it'll do. They won't pass the inspection. They'll say that this is not up to FHA code, and you can't go ahead and do it. But let's get out of that. Other than that, FHA loans are great. They're amazing. We do we did do a lot of them. It sucks now. We're pretty much hurting. It's the real estate market is not that hot anymore. It is not hot at all. It's actually cold as shit. It's really, really not that great. But let's get on with the FHA loan. Let's see what the pricing is on it. And then you can kind of get an idea for yourself. So for the sake of this argument, we're going to do a credit score of 640, 700, and 800. I think those are three pretty basic platforms. If you end up wanting me to do any other ones, just put in the comments below. I'll go ahead and do whatever scenario you want, and we can kind of play it by ear and try to figure things out from there. But let's go ahead and go out the pricing and see how much this sucker costs. All right, here we go. So this is going to be, this is easy qualifier. Now the original program, and I have no idea why I'm even telling this because most of you won't even know, but majority of the program that we usually use is this program called LendingPad. LendingPad is, it's awesome. This is directly on the wholesaler website. I just like this wholesaler, so I send a lot of loans this way, but this is directly on their website. And the reason why I'm not using my main website is because there's a lot of personal information on there that I'm not going to be able to navigate around, and I don't want to go ahead and get any information protection. I don't want to give up anybody's information, but let's go ahead and get on with it. So this is easy qualifier. This is a drag and drop. We're not going to drag and drop anything because this is a drag and drop just means that your 1003, which is your mortgage application, that's going to be where we're going to go ahead and put it in, and this is where we're going to go ahead and put it in, which is your Fannie Mae 32 file here. Company name, that's just going to be me because I am the broker and owner here. And then we're going to go ahead and put myself as a loan officer too. And then we're going to go to test. We are going to go ahead and not do that. And we're going to go ahead and put this as a conventional because that's where we want to be. And we are going to go ahead and stick to that $400,000 mark. There's not going to be a second loan. Second loans are usually like if you get a down payment assistance, then we go ahead and pre-populate it in here to cover your 3.5%, which you do have the option to have. Down payment assistance will go ahead and cover your total down payment, so you don't have to, all you have to worry about is title escrow and any impounds that you have, appraisal, and all that other stuff. Sale price is going to be, we're going to go 80%, no, not 80% loan to value. We're going to go 96.5% loan to value. Sale price will be at $400,000, which we'll go ahead and, the appraised value is going to be at $400,000. So, and then we're going to do a 96.5. So that'll give us purchase price of, or sale price of $400,000, 96.5% loan to value, $386,000 will be your total loan amount that you will have. Now this is going to be your primary residence. We're not going to do anything out of the crazy. We're going to stick to the single family condo. Property state will be, we'll do California, 932, that'll be Los Angeles, that's the last one we did. So we're gonna do, the first one is going to be at a 640 credit score. And to keep it all in an even keel, we're gonna go ahead and do a monthly income of $10,000. I'm just doing that it doesn't really matter. You still have to, me putting the monthly income at $10,000, it does affect a little bit, but it doesn't. You still have to fall under the guidelines as far as income goes on FHA. So for that, it doesn't really matter. Taxes, we're just gonna go ahead and put, let's put $8,000 as far as your taxes. Homeowner insurance, we'll just put it at like $100 a month, so that'll be $1,200. No finance charges. We're not going to do any of the self-employed or anything. The commitment period over here, which is your lock period, this is super important, okay? So 30-day lock period, that means that we have to conclude all inspections, all appraisals, all conditions on every single loan within the 30-day period. But it's not really a 30-day period. It's actually a lot less than a 30-day period because we have 3 days until you sign your ITP, which is your intent to proceed, which is what your loan estimate. So whenever you go ahead and apply and you're like, okay, Omar, what do you have for me? This is what I got. We're at, 4.5% or 5% or whatever it is. Nowadays, it would have been a lot less a long time ago. But we have to go ahead and make sure we fund within 30-day lock period, which will be 6/20/2022. Everything needs to be done 4 days before this, though, because from the moment we have clear to close and you go and sign your closing disclosures with title, you have a notary that's going to go ahead and come to your house, and they're going to go ahead and you're going to sign all your documents and everything. We still have, so that's 26 days.
then we have to make sure that we fund by the 30th day. That's why whenever you are doing a loan, it's very important to be punctual about everything and give things the way that it's actually meant to be given. If the lender or myself or whoever's doing your loan is asking you for something very specific, just try your best to give it to them exactly they want. And if you're working with me, of course, I'll go ahead and help you out and make sure that it's all dialed in, make it as easy as possible for you. But this is very important because if we pass that, then you have to pay for every single day that we do a rate extension. And you don't want to pay that. I don't want you to pay that. Nobody wants to pay that. So your compensation, I'm going to go ahead and change this to borrower paid because I don't want you to see what my compensation is going to be with this lender, my pre-populated compensation. That's kind of weird. But borrower paid is very important to know because the difference between borrower paid and lender paid is if I'm in a category where I'm competing regularly with a lot of these other companies, and your big banks or other brokerages or credit unions, whoever it is, if I want to go ahead and compete with them, I have a predetermined compensation rate with them. I could go ahead and switch this to borrower paid, which the only difference is if I have it at lender paid, you won't see how much I get paid. That's just what it is. You're not going to see how much I get paid because I get paid directly from the lender. But if I want to go in and compete, nothing changes. The only difference is you're going to see how much I get paid because I am trying to compete. At the end of it, your total loan estimate is going to be cheaper than the other one. Your fees are going to be cheaper. So don't ever get discouraged by seeing what borrower paid versus lender paid or any of that is. You won't see the lender paid portion of it, but you will definitely see a borrower paid if there are people that are competing. Documentation type is just full. That means that we have your W-2s, your pay stubs, all that other stuff. We have a full package on the document. Now, this is going to be a 30-year term. We're not going to waive any underwriting fee, or we're not going to be doing that. We're going to go ahead and get a quote. Let's see where we're at on this one at a 640 credit score. So at a 640 credit score, so we're going to go ahead and go here. Now, this is a real estate owner. We're not going to go ahead and do that one. With a credit. So right over here, you get a credit at 4%. At 4%, currently, as of today, that is 5/21/2022. Now, these are all subject to change. Your total payment on this is going to be $29,1297. Your principal and interest alone is going to be $1875.07. So this is more important because this actually changes because you get to shop around for, your homeowner's insurance. That could be less. Your property taxes could be a lot less. So this is just the numbers that we put in front of it. So as you see down here, your loan amount has changed. It is not that 386 anymore, right? Because what we have is you have to go ahead and finance that mortgage insurance that is just going to be dumped into your total loan amount at $6,755.00. So that's what that is. But at here you get $259.22 credit. Now, and this is at a 640 credit score. So now let's go back up and let's change this over to a 700 credit score. Let's see where we're at on a 700 credit score. With the same parameters, everything still stays the same, FHA. So this is the difference between the 700 credit score and a 640 credit score. So we are at a very small cost at $192.45 at 3.875%. If we went over here, so this is the difference. You get a credit of $2,222.99 if you take the 4% that was previously, but we're trying to stay within a few $100s of each other. So you'll be at $1,846 instead of $1,875.07. So it's a little bit of a difference there. It's about $30 difference, give or take. And then the kit and caboodle, the one that everybody always tries to see where we're at, is 800 credit score. So let's see what the difference between that and this is. So at an 800 credit score, let's get the quote. All right, so 800 credit score on a 30-year FHA loan is going to be at 3.875, which is $192. So honestly, it doesn't really make too much of a difference between a 7 and an 800 credit score on FHA. It might make a difference on a conventional. It might make a difference. Now, this is all pricing based on day, and I'm not going to lie to you. It probably has changed from hour to hour. But as far as FHA loans concerned, these are some of the things that you want to know. You do have a mortgage insurance that will get financed. You can pay for it if you like to, but that goes and dumps into your loan. This is something a lot of people don't talk about, but this is good to see it just the way that it is. These are going to be the total rates of everything. Now, if you want to go ahead and get something that is like you want to get the most seller credits, you could actually be at 5.625 and you'll get $15,835 back. Now, of course, this all excludes like any origination fees or any underwriting fees or anything like that. There are other fees associated with this, but this will help you at your closing, to help you with your closing costs. But yeah, so if you want to go ahead and pay the most, though, at 3.250% on an FHA, it will cost you $12,658.49, excluding any origination charges or anything like that. So that's going to be FHA loan priced out in a bundle at 3 different credit scores, your 800, your 700, and your 640. Now, whenever you go to new construction or you're self-employed or any of this other stuff, it does change very, very slightly, but I just have to go ahead and give you that disclaimer that it does change, and that's what it is. Let's go ahead and stop this recording. Bam. So that's what it is with 3 different credit scores as far as FHA loan is concerned, exactly the pricing between them. So hopefully this helped you out. If there is something else that I could answer, please comment below. I am a mortgage broker here in the state of California. I own these 2 companies. I'll be more than happy. And even if you're not in the state of California, you want me to answer something in your state, by all means, let me know. I'll be more than happy to help you out. So for up to 50% commission rebate on your next real estate purchase, 0% listing on selling your current home or any mortgaging assistance, because our bread and butter is lending and mortgaging, and we have every single mortgaging product out there. For the most part, let me know if you have a specific scenario that you want me to go over. If you want a DSCR loan, a bank statement loan, majority of these really non-qualified mortgages, hard money, it's just a bunch of different ones. Let me know. I'll be more than happy to go ahead and help you out. Until next video, guys, please continue to help us out, to help us grow. Like, subscribe, comment. I'd really appreciate it. But as far as the video goes, I really appreciate you guys watching. Till next video, guys. Peace.